All right, everyone, we are going to short a stock and I'm going to risk my hard-earned money teaching you how it's done. So in this video, basically I'm going to compile a couple videos that are going to take place over the next 4 days as I short a stock. We're going to walk through all the steps, what you need to know. Just basically by the end of this video, you'll have an understanding of if you wanted to short a stock, how you could do it, and also just understanding like what it actually means to short stock. So we're going to walk through all of that, and we'll also see at the end of this video if I actually made money, if I lost all of my money and it went to zero, but we're going to have a little bit of fun doing that. So stick around and I'll see you later. All right, so let's do a quick overview on what short selling and what put options actually are, just so you have a good idea. We're actually going to be doing a put option in the video coming up. We'll see if we win or we lose, if we make money or if we lose it all. But let's just do a quick overview of that so you know what a put actually is and what short selling actually is. So in general, I will say short selling and using options is an extremely risky thing for someone that doesn't have very much experience. So although we're using this video to kind of have a little fun, I do also think that by the end of this video, you'll have a good understanding of what these products are as investments that you could take advantage of. But I will say, typically it's something that you're going to research a lot more than even just buying a stock. There's a lot of complexities that can be involved in it, and it's not something that I think you should necessarily take lightly. And I'm not your financial advisor, so just remember that I'm using this channel to spread financial information. I would love to help you, but also if this is something that you're interested in, I would recommend researching a little bit more, getting in touch with a financial advisor. This is just, again, kind of my fun way of giving back, putting some of my own money in there and hoping we can actually learn some fun things together. Just a quick mid-video interlude. I'm trying to grow my channel. Would you help? Just give me a quick little like or scroll down and give me a comment. Just let me know what you're thinking. It helps so much. I really appreciate it. Thanks. Back to the video. So essentially what's happening when you're short selling or you're doing a put option, we're not going to talk about call options in this video, but short selling and put options are basically a bet against the market or a bet against the stock. So you basically think like at the present today, the value of that is actually higher than what its intrinsic value is or what it should be valued at. So you're basically betting against that and saying in the future, I think the price of that is actually going to decrease. Now, one of the hard things is just knowing when that's actually going to happen. Timing that is probably not something that I would even say is possible. Timing is a lot of luck. You would think maybe it's sometimes even like right now that the market might be overvalued. We just got a bad employment number, bad labor report, but still the market's going to all-time highs. So it's really hard to time markets, and that's the similar type of thing with short selling. So essentially with short selling, what that means, we just talked about you're betting against a stock, but essentially with short selling, what happens is you're actually borrowing a certain amount of shares from someone to sell on the market today, and then you have to repay that person in the future with other shares. So essentially what's happening, you think that the price is going to go down in the future, and because the price is going to go down in the future, you're going to be able to repay the shares to that person by buying them at a lower price on the market. So don't worry, we'll walk through an example right now. So let's say you buy, you want to short a stock, we'll call it stock B. So stock B is selling for $100 per share, and you think that the price $100 per share is actually far too high. So you've maybe done a calculation to figure out the value of it, and you just think it's too high. So basically what's going to happen is you're going to tell someone, I want to short sell this stock. So they're going to sell one share on the market for $100 and basically give you that $100 and say, now you need to repay me in the future with one share. So now, let's say that the price of that stock goes down to 50. You can then repurchase that stock at $50 and give it back to the person that you borrowed it from. And then you get to keep the difference. So in this case, this is just a very oversimplified example, but in this case, that difference would be $50. So they sold the stock for $100. You basically borrowed that one share from them to repay them in the future. Stock then dropped to 50. Maybe a couple months later, you rebought it, paid that person back with their one share, and then you get to keep the difference, which is the $50 difference at this point. Now, it could also go completely in the other direction, and this is why with short selling, there's pretty much the loss for you could be infinite, so it is very risky, because if the stock goes up to 150 or 200 or 250, think about Tesla right now. Like Tesla stock, this is why a bunch of people have gotten burned over the last couple of years, because Tesla stock just keeps going up and up and up and up and up. So in that case, you might get these losses that the person sold it at $100, but now you have to repay them at $700. So maybe you lose $600 or something like that. So it can be extremely risky, but short selling is essentially you're borrowing a share, or not necessarily one share, it could be however many shares. You're borrowing those shares that someone is selling on the market and you repay them. There's also some things to take into account, like a lot of times, think about borrowing shares as just like if you were to get a loan from someone, there's interest. So a lot of times too, like the longer it takes for you to repay back the share, there's interest, or there's some sort of fee involved in that as well. And that can also kind of cause people to lose money over the long run, just because they're continuing to pay back this interest until that price drops to the level that they think it is. So that's kind of the short selling example there. And then the other thing, then this is actually what we're going to be doing in the video here, is a put option. So I'll just explain put options real quick, and then we'll actually jump into the video and actually watch me and see if we make money or lose money. Now, a put option is similar to short selling in the sense that you believe that the price of the stock is going to go down, but it's a little bit different in the sense that someone's not actually selling those shares short for you. They're not basically giving you the shares. You're basically buying an option to sell a certain number of shares on the market at a specific date. So put options are a bit more complex because there's a couple different factors. There's an execution date, so you basically have to sell your shares or your option will expire on a certain date. And there's also a strike price, which basically determines how low the stock actually has to fall for you to actually break even on your option trade. So in the case of, we'll use like another oversimplified example here. Let's say that the stock is at 100 and we believe that the price will decrease in the future. We would first need to figure out what date we think the price, will decrease to a certain level, and what level will the price decrease to. So let's say, it's starting at $100. I think in the next 3 months the price is going to go down to $90. So then I would buy an option basically saying, it's a 3-month option, so if the price decreases in the next 3 months to $90, then anything below $90 is basically my profit. The one thing with options to think about is that there is a fee associated with options. So whereas with short selling, your loss can be pretty much infinite depending on how high the stock goes. In the case of a options trade or a put option, you're basically paying an upfront fee. So let's say it's $2 per share and it's an option for 100 shares. That's a $200 fee that you have to pay to own that option. And if the price does not drop to the level that you need it to, by the execution date, you lose that entire fee. So you would lose that $200 in the example I just talked about there. So also the one other thing we'll just mention, and then we'll hop into the video, is because there's a fee associated with it, even if the strike price, let's say I've been using $90 as the example, let's say the stock gets to 90, because I paid that upfront fee, just because the stock gets to 90 does not actually mean I broke even. I would basically need to calculate what the lower price of 90 would be to actually break even, because selling it at $90 is still going to make me lose the $200 that I was able to actually purchase it for. So that's just one thing to note. Like the fee that you have to pay for your option is also, just because it's a strike price does not necessarily mean that that's the price you'll start making money. That's the price minus whatever the fee was that you already paid as well. So let's hop into the video here and let's actually see what happens when I do it myself. All right, everyone, welcome back. It is time to have some fun. So we are about to short a stock and show you how it actually works and what the process is to get it done. So I'm going to pull out my phone right here and I'll walk you through. You should see it show up here in just a second. It's Wednesday afternoon and we are about to short the S&P 500, and there's some crazy stuff going on. So figured, hey, this is a perfect timing and might as well see if shorting a stock is going to work for us. So here we go. Now I'm pulling up my phone, and what you should see right here is just, I'm using Robinhood. I'm not the biggest fan of Robinhood. We can kind of go into that in more detail on another video, but just in the case of buying and shorting stocks, they make it relatively easy, which is one of the pros and the cons. So here we are on Robinhood. The buying power, don't really worry about that. That's just the amount of money I have in the account right now. But I don't really use Robinhood for anything, but we're going to use it for this video. So we're going to go to browse here. We're going to browse for S&P. So that's SPY is just the spider index fund for S&P 500. This is just kind of showing the ticker here. A little bit of news of what's going on in the world. Then I'm going to go down and click trade and then trade options. And this is basically going to pull up, low battery. This is basically going to pull up a little modal that kind of says, okay, I think it's going to go up. I think it's going to go down. We kind of talked about buying calls, buying puts. We didn't go through covered calls or anything like that, but case of buying calls and puts. So we are going to think it's going down. Basically what you're looking at right here is I have a couple different options for dates that I can choose, and each date is going to have different levels of the stock that I make, right? At least different levels of the break even that I'm actually going to bet for. So in this case, just kind of see if I click that one, the price is going to be $283 for that as well. So each of them would basically be for 100 shares. It's basically going to be $2.83, and that's going to change really quickly as well, because now you can actually see it's $2.85. So as I kind of go through the dates here as well, you'll notice that the price for that specific the 376 put actually goes up. So, and then at January 15th as well, the 376 put has also gone up there too. So kind of went from high $3 to $4, and then this one's $5. And the main idea behind that is as the date gets farther away from where the present is, you're basically having a higher chance of actually hitting that break-even point. So in this case, you'll just kind of notice, the break-even point is, I have to go for the 376 put there, the first one that you see. To break even, the market would have to drop, or the S&P would have to drop by 0.46%. And then, you have different options here. So where the break even basically is getting farther and farther away, or I guess higher. So in this case with the 370 put, it's $137, kind of fluctuates quickly just based off what the market's doing. So it started at 137, now it's 144. So the 370 put for the 100 contracts, you just kind of notice that's what the cost would be. And then as we kind of scroll down again, you'll just notice that, for example, we're going to move forward with the 369 put in a minute. But essentially for the 369 put, we have a break even of 1.74%. So a decrease of 1.74% is what we would need to even just to essentially break even. So if I kind of click on this, you'll notice I can put 1 in there. The limit price is essentially, the max price that I'm going to pay for 100 shares or one contract to buy 100 shares. So this is the S&P 369 put with January 8th as the date. So essentially I'm saying by January 8th, if this option right here does not hit my break-even point or lower, then my option expires essentially. So you'll notice down there at the bottom, we can just kind of read that through. I'm paying $125 for the right to sell 100 shares of SPY for $369 per share by January 8th. If SPY isn't 369 or below, then the option will expire worthless. So basically I need it to go below 369 to make money. If it doesn't, then this max cost of, in this case, says 125, is pretty much going to go to zero and be worthless. So that's kind of what we're betting here, just to kind of show you the different options of what we're going through. So let's move forward with this. Basically we're just going to swipe up here, submit that, and we'll see order sent, order received. And okay, so actually one just kind of quick note here, you'll notice we put the limit in at 125, and then when we actually bought it for 119, so it actually went down. The price went down, which means the S&P 500 probably went up at that point. So we actually bought it at 119. We have one contract here, and now we have till January 8th to see what happens. So just as we I'm going to go back out real quick just to the home screen. So you just kind of notice here, this is just the S&P ticker here. So you can just kind of see again, as this fluctuates, the price of my option or the price that someone would pay for my option at this point is going to fluctuate as well. So let's go back out to the home screen then, just kind of show you that. So since we bought it, if you just kind of take a look at this, we've made $3 so far. And that's going to fluctuate pretty rapidly up. Now it's up at $6. So again, that number, we've only had it for 30 seconds, minute maybe. That number is going to fluctuate quite a bit, especially since the option is going to be expiring pretty soon. Just 2 days here. So, I'll do another video coming up right now. So just stay around, just for the end. We'll do it at the end of the day. So we've got, let's see, 2 hours, 1 hour left till the close. So we'll do another video coming up here just in terms of the close of business or the close of the stock market to see what it looks like. All right, stick around. Bum, 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 we're back. Now, risking your money is not easy, but giving me a kind little like is super easy. Scroll down, hit that like button. I thank you so much. All right, the market has closed on Wednesday, so let's see how we did. I'm gonna pull it up again right here. So we have made $33 so far, but this does not mean we actually made $33 yet. It just means the actual value of our options contract has increased by $33. So this can fluctuate very quickly. So by tomorrow, this could be practically we could have lost all the money. But right now, as of this moment, $33 is our current gain. So let's actually just kind of walk through that in a little bit more detail. This option thing, it says minus 36.46%. Don't really worry about that because that's actually just taking into account the entire day for the options price. But here you can just kind of see on this next screen how the options kind of fluctuated. So you'll see right in the afternoon when a lot of the news was kind of breaking, it got a little bit more volatile and the price actually increased. So basically what's just going on here is people are taking into account what's going on in the world, how likely they think, again, our option is a January 8th expiration. So how likely it is that the S&P will actually drop to our break-even point for this specific option. So as we kind of go throughout the afternoon, that price actually increases. And in our case, we actually do want that price to increase from where we bought it, because that means that, one, it's getting closer to our break-even point, and also people are more willing to actually pay for the option to buy shares at that level. So we want the price to increase. And then here what you'll see is on the on our position page, it'll actually show you how much equity we have. So again, just kind of showing that we have a $33 gain, which is technically a 27% increase on the original purchase price of $119, or the average cost of that purchase price. And just kind of one thing to note here is, even though technically the S&P didn't decrease by that much as we were going through the option, or I guess throughout this day, the S&P hasn't necessarily decreased that much since we purchased it, but basically the risk or the likelihood of us actually achieving that option has increased, just given the volatility and some of the uncertainty now that's in the market with some of the things that happened throughout the course of this afternoon. So basically kind of, as we go through this, we'll see what happens tomorrow. I'll show you maybe in the morning kind of what the number looks like, and we can kind of track this, but we'll basically track this all the way through Friday. I could at this point sell and gain $33, but for the sake of this video, for the sake of education, we're going to risk it all, and we'll actually just see what happens through Friday. So I'll be back tomorrow. All right, y'all, we're back, and the news is not so great. Let's take a look at this here. So we've lost a lot from the equity that we had yesterday. So we're at minus $138 for today, which is minus 90% on the price of the option. So when we kind of click through, just kind of go through the details here, you'll see it's at 14 cents. Ooh, we bought it at 119. Our equity is only $14 that's left, so this might be going to zero. So today's return, minus $138. The total return is minus 105 because the equity actually went up yesterday. Yeah. Oh, we lost another dollar just on the spot here. So I mean, the reason that this is happening is the S&P is still going up. Kind of baffling to me, but S&P is still going up, and as the S&P goes up, because we're shorting it and we're betting against it, obviously the price of our option goes down. So yeah, see you later. All right, here's another update. Do we still have a chance? Let's find out. Here we go. So no, it doesn't look like we do. So now we're at minus 144, but again, that's because we had already gained $33. So that's just for today. Basically, S&P 500 has continued to go up. So as we scroll down here, minus 94%, and then it's only at 8 cents. So it was at, what was it, 14 or 13 cents this morning. Now we're at $8 in equity. We have one more day. So we'll see what happens tomorrow. But at the moment, this is the value of the education of short selling. All right, y'all, we're back, and I'm wearing a parka because it is freezing cold, even though the sun is brightly shining on my face. It is the morning, and we have the rest of the day. So it didn't go too well yesterday, and let's see what happens here. And before we get going, would you mind just clicking the subscribe or the like, or actually just giving me a comment on what you thought so far of this, and if this was a good idea or not. We're doing this for education, and it's always worthwhile to educating ourselves, even including myself. So if you'd be so kind, just give me a quick like, and let's see what it looks like for today. And oop, it is not looking too good. So lost another $6, minus 75% from yesterday. So if we lost $6, let's see, what does that put us at? That puts us at $2 in equity. All right, we've got $2 left. So we've, unfortunately, when we bought it 119, $119. We've got $2 left, so lost $117. Current price is two. I mean, essentially, basically, what this is saying is that it's so unlikely that we're going to hit our break-even point because the S&P again just continues to go up. Don't ask why. Just look at that. Just continuing to go up. So here we are. And yeah, I'll do one more video coming up here. It'll be just like a 30-second one, just kind of wrapping this up. But it'll have a little bit more information, so stick around right till the end. All right, y'all, let's see how we did. The market is closed. Thank you, though, for sticking around with me for this amount of time. I hope you had a little fun. Did you learn anything? I hope so. I hope you had a little bit of fun, too. So let's get going, and let's actually just pull this up again, and let's just see what the end was. So in the end, we lost $7. Ooh, just today. Just keep in mind that's only today. So minus 87 for the day. We have $1 in equity left after all that. So minus 118. So we went to zero. It was always a risk, and I think this is also like just again, like as we went through this whole video, like the learning at the start was short selling and put options and just options in general, investing in general is risky, and the way we did it here is not how I would recommend doing it. This was just very like spur of the moment, kind of like let's create a video, let's show some people how it's done. But I would say this is definitely something a lot more research needs to be done. People need to do more analysis on the intrinsic value and also in terms of like dates, like execution date. Like I just chose 2 days from now just to kind of show you what that looked like. But this is definitely something that is not for the faint of heart and something you can definitely do. I just hope that this video was a little bit of fun, and thanks so much for being here. You are awesome.